Greener Media's Mining Weekly is speaking to Trevor Raymond, the Director of Research of the World Platinum Investment Council, which today publishes their quarterly report for the second quarter of 2021. Trevor, what does today's report drive home? What are our takeaways?
Thanks, Martin. I think what we saw in quarter two was a very strong recovery from a really tough quarter two in 2020. We've seen demand increase by 23% with strong performances from automotive and industrial. They were up 76% and 46% respectively. But supply was up even more. It was up by 55%. And that was really the South African mining operations operating largely without those COVID shutdowns that they suffered last year, and certainly without the ACP plant outages that were suffered last year. And then supply was also boosted by a faster than anticipated processing of the backlog material that built up while that ACP plant was out last year. So together with that, supply up 55%. So we have a quarterly surplus, and then that also translates into an annual surplus. The same impact of that additional material from supply, strong automotive and industrial jewelry up. And then investment demand, although weaker, certainly still over 500,000 ounces and above the 8-year average prior to COVID. So interesting, yet in surplus at the moment.
And going forward, Trevor, what sort of supply-demand dynamics are likely to play themselves out? Are we going to see more of the same?
So I think from a demand, firstly from a supply point of view, I think what we're seeing now is a sort of a transitory effect. With the boost of that processed material that built up last year, what it looks like is that supply is quite strong. But without that processing of that material, the mining output level is certainly below that of 2019. So there was about 500,000 ounces of the semi-finished material that was built up. We expected about 200,000 to be processed this year, and that looks more like 300,000. But what that also means is that next year you've got 200,000 ounces that'll be processed. But that means at the end of 22, we're still looking at supply that's appreciably weaker than it has been. So with that constrained supply, I think it's all the more relevant what happens to demand. And demand looks like it's strengthening strongly from increased loadings, particularly in China heavy duty. A lot more heavy duty vehicles being sold. Certainly a lot more substitution of palladium by platinum. And then a lot more investor interest, particularly with platinum's links to the hydrogen economy. So looks like constrained supply and certainly strong demand growth. So quite interesting from an investment point of view.
And has the chip shortage peaked yet on the automotive front?
It appears to, Martin. We've had a lot of negative news flow. The sort of estimates have been up and down and really all over the place. And right now they seem to be quite pessimistic. A lot of people are, reading into things like Toyota shutting some plants. But I think what you're just doing is you're getting a balancing. The automakers will typically focus on higher margin vehicles. So a large diesel SUV would have a better margin than a small gasoline vehicle. So those would tend to be prioritized. We've also had a much bigger effect of the chip shortage in the US and to an extent in China, and those are mainly gasoline markets. So the impact on palladium has been a lot greater than the impact on platinum. Having said that, I think the news flow has been quite negative, but the significant increase in heavy-duty loadings and even in light-duty loadings as well as substitution means that the automotive demand that we're showing this year is actually, although it's a huge increase over last year, is also higher than the 2019 levels. So despite that disruption caused by the chip shortages, platinum automotive demand is at higher levels than 2019, even with the pessimistic outlook right now. We think that there's some room for potentially estimates to increase. In other words, as you mentioned, we've had the peak of this chip shortage and it should resolve itself towards the end of the year. And if that happens, there's also been quite a backlog. There's a lot of demand for vehicles. I've heard in Europe, people that are looking for a vehicle are looking to, anything 6 to 9 month waiting lists on vehicles, and that's pushed prices up a little. So I think if we were to see that chip shortage unravel a little bit, there could be quite a lot of pent-up automotive demand that would be quite good for platinum.
And what can we expect from industrial demand? What are the factors driving industrial demand growth?
Yeah, so we've seen a really record spectacular industrial demand growth in 2021, and that was largely as some of the capacity expansions in China that were planned for 2020 were moved into 2021. So we have had a bit of a combination of those factors. Having said that, the capacity expansion in things like paraxylene, nitric acid, glass manufacture, we've seen the petroleum refining come back strongly as COVID unraveled and people started driving cars again. Huge increase in demand for petroleum, and therefore those turnaround at the petroleum refineries that were delayed have happened. I think going forward, that capacity increase still seems to be continued. The large fiscal stimulus that's been pumped in around the world, particularly in China, focuses on construction and infrastructure, and those tend to then push up demand for all the other products that platinum is linked to. So I think industrial demand is certainly a strong demand growth area in those areas, and glass particularly. I did mention glass, very, very strong growth in China for glass capacity.
And although we look at the hydrogen economy as sort of longish term, every day I'm reading more reports about this hydrogen economy. What do you think is likely to eventuate from the surging global interest in hydrogen?
So I think you're right, Martin. The news flow really is about increased policy certainty. So we've had a lot more policy confirmed around the world. And I think what that's doing is it's giving people the comfort that this thing will certainly happen. From a platinum investment point of view, as you're right, it's fairly long term, but it's quite chunky. You're looking at somewhere between 2 and 3 million extra ounces on an 8 million ounce market, even though that's 8 or 10 years out. So it's a big comfort factor. I think the short term is that you've got green hydrogen manufactured by using platinum electrolyzers, and you've certainly got heavy duty fuel cells that seem to be coming in a lot quicker, particularly in China. So when investors join the dots between decarbonization and platinum, they certainly will come and have a look at platinum, and that's pushing up investment demand. There's another angle, Martin, is that people are talking about banning internal combustion engines and moving from internal combustion to electric, and that's going to take some time. The length of time is uncertain. So what we need to do in the interim is to be more CO2 efficient. And the hybrid internal combustion engine vehicle, that really is CO2 efficient. So my feeling is what platinum is able to do as well is it's enabled to facilitate the use of gasoline and diesel hybrid internal combustion engines as a transition from internal combustion to electric. So I think we're going to see a lot more news flow about the importance of hybrid vehicles. Those also use far less battery material, so they're a little more attractive than a straight battery vehicle, and certainly low carbon dioxide efficient, and a huge demand for both platinum and palladium. And in the gasoline, we're now seeing more platinum in gasoline engines, good for platinum in the medium term. So I think the hydrogen economy attracts people from the longer term, but there's a lot in the shorter term that really is relevant. And then when investors come in, just looking at platinum as perhaps an investment for decarbonisation, they then see the same things we've been talking about earlier, constrained supply and demand growth in the short term.
And swinging to jewellery, we saw good demand in the US, but China seemed to be lagging. Do you think they'll catch up with the jewellery demand there and platinum will become favoured again over gold?
Yes, I think you're right. North America and Europe strong as some of those personal savings were benefited during the COVID period, and those are up strongly. China, I think there's been strong competition from gold and also the price differential. I think gold moving up to 2,000 and then pulling back to 1,800. People then saw the 1,800 as quite attractive for gold, so that's why there's been quite a lot of competition. So China jewelry does seem to be weak. We're expecting about a 15% decline in that this year. I think the brand awareness in China is that platinum is certainly still better than gold, and wanting, it's got the biggest linkage to love gifting. So certainly we think platinum has huge potential. It's just a matter of how that plays out. But don't forget, I think that decline in China is also about COVID-related disruptions. So China last year had the footfall interruptions earlier in the year, but some of those have dragged through certainly into this year more so than in the West. So we still think that there's some unraveling of the COVID disruptions might see slightly stronger jewelry in China.
And what is the outlook for the investment demand, for things like exchange-traded funds, bars, coins? And what is referred to, I'm not too clear what it is, exchange stock inflows.
Good point, Martin. So I think just at face value, if you just glance at the numbers, last year investment demand was about 1.5 million ounces, and this year we're saying it'll be 500,000 ounces. So that decrease of 1 million ounces is quite a spectacular number. You might think, well, investment has collapsed, but not at all. So I think ETF inflows in 2019 and 2020 were particularly strong, nearly 2 million ounces. And what we've had now is that the ETF investment has slowed up a little. Interestingly, mainly on South African funds who are looking at slow capital spend by the producers and thinking that the dividend yields are probably more attractive than the ETF. So although ETFs have come down, particularly since the end of June, that's mainly been switching into platinum equities. And then the bar and coin remains particularly strong. I mean, I think anything over 300,000 ounces for bar and coin is particularly strong. And that says lots of retail investors still want hard assets. Anybody looking for something other than a US equity, a bar and a coin sounds very sensible. Exchange traded, stocks held by exchanges. That's mainly the NYMEX futures exchange in the US. And typically for the last 2 decades, that futures market operated with stocks of about 100 to 200,000 ounces because most futures are cash settled. No one really looked to those stocks particularly. What happened last year with the restrictions on travel is that a lot of those market-making banks needed 50-ounce bars to back those futures, and there just weren't enough in New York. So they took large bars in Europe, melted them down, turned them into 50-ounce bars, and we saw nearly 700,000 ounces of 50-ounce bars flow into NYMEX stocks. So perhaps the situation is that it worked for 20 years with stocks of 200. It's now going to work for the next 20 years with stocks of 700. But that just means that the swing between the 2 years looks quite dramatic. I think the importance is that those stocks are there. The market makers are making a good market in futures. But interestingly, we saw about 160,000 ounces come out of those stocks just after June. And that seems to be because the platinum is just unavailable. We saw the lease rate spike. So we think that although the news flow still tends to suggest platinum is plentiful and that there's surpluses, we think that lease rate spike and people actually using a future in order to get metal is certainly an indication that the platinum market is tight, not fully reflected in the price yet, but certainly an indication that things are a little different.
That was Creamer Media's Mining Weekly, speaking to Trevor Raymond, the Director of Research of the World Platinum Investment Council.